Tesla's stock was up about 5% today, and well, I can see a scenario where we could actually be looking at a much larger rally coming over the next couple of weeks and the next couple of months. Potentially a win-win scenario overall for Tesla stock investors. And I want to explain this to you here in this video so we're all on the same page. Now, we do have some events tomorrow that will be important, including economic data as well as earnings, and I will give you my perspective on this. You know, I could be wrong, I could be right, but hopefully we're more right than wrong. I will also share part of this article for you guys that says Tesla's Q2 results are better than it seems. Here's why. As well as the massive beating that short sellers took today, losing over $1 billion, which over the next couple of days, if things play out as I suspect they might, then I think there's going to be more pressure on the shorts to even cover on their short positions. So first and foremost, just a little bit of a backstory of what happened today and what's causing Tesla stock to go higher. If you did not watch the last video I posted on the channel at 4 p.m. today, I highly recommend you guys do so. But essentially, there were two major things. Adam Jonas, he put Tesla as his top pick again, taking Ford off of that list. And Adam Jonas really cites the energy business for this, the underappreciation of the AI and the robotaxi business longer term. He says there's a little bit of hype here in the near term, but longer term, it's very underappreciated by Tesla stock investors. And in fact, Tesla is redeploying basically all of their excess capital into AI efforts, energy efforts, and very little actually into the auto business. And long term, the auto business is not where the profits are, again, longer term, whereas Ford and other automakers, they're still focused on the auto sector. No, Ford doesn't have an energy division, right? Not like Tesla, that is. And for these reasons, he's, well, putting Tesla as his top pick again. And he's the best, highest rated auto analyst. Wall Street takes notice when someone like that makes such a change. Now, the second thing that really happened today that drove Tesla's massive rally and outperformance was Piper Sandler Analyst that issued a new bullish note. They say, quote, Tesla may have solved the self-driving puzzle. Don't roll your eyes. Buy Tesla. I mean, that's about the most bullish note you'll ever hear on Tesla. In fact, the way that they actually put this leads me to believe that maybe they have someone on the inside that says, hey, we're about to solve full self-driving, like for good this time. Now, that's just my speculation, right? But I think that's kind of what's affecting Tesla more than even Adam Jonas putting Tesla as the top pick. As I said in the last video that came out at 4 p.m. today, this may be a little bit of leaked information potentially to Piper Sandler, but I don't know that for certain. That is not a guarantee, and well, that's just my opinion, but definitely not a 100% guarantee. But that's a strong statement from Piper Sandler. Now, coming out this tomorrow morning around 5 o'clock in the morning, you will get the GDP growth rates for Europe. Likely not going to be, moving catalyst for our markets. It could be, but probably not. You will get S&P Case-Shiller home price month over month and year over year. Expecting these numbers will come in smaller than what they did for the month of April. Marginally, I mean, you're expecting 1.2% month over month for the month of May, and you're expecting 6.9% year over year for the month of May. So just down a little bit from the previous month. I don't think that's going to be too important. JOLTS job openings is the thing that's really going to catch Wall Street's attention. Now, do we see a downward revision to last month's number of 8.14 million? This number surprised to the upside, and it got Wall Street a little bit more excited that maybe the economy is doing okay after all, because you don't look to hire a bunch of employees if your business is not doing okay, right? Is not doing good. So this does suggest that maybe the economy is doing a little bit better, especially if we don't see a big downward revision for last month's numbers. We are expecting 8.05 million, and that would be a fantastic number. Really, you want to see it as high as possible, again, because the more potential hiring that is looking to happen, business owners are trying to get done, then the stronger the economy will probably stay. The last thing you want to see is JOLTS job openings drop like 1 million jobs coming tomorrow morning. I don't think that would be seen as positive by the markets. Although that would really reinforce the Fed cutting rates as soon as possible, I don't think the markets would like to see that many job openings just disappear in a month. That would suggest some pretty rapid deterioration of the economy. But that is it as far as your economic data coming out tomorrow morning. I think earnings could potentially be the bigger focus as long as JOLTS job openings do not come in really high or really low. You do have SoFi, PayPal, Pfizer, BP, P&G, Corning, Merck, Enterprise Products Partners, and JetBlue that reports tomorrow morning. And then tomorrow and after hours, your big dogs, AMD, Microsoft, specifically Microsoft will be important with the whole CrowdStrike situation. Did that affect Microsoft's business? How much did that affect Microsoft's business? We don't know. I think the markets probably want a little bit of clarity on that. Starbucks, Arista, that stock's went insane. So that's going to be an interesting one. Pinterest, First Solar, Caesars Entertainment, Lemonade, Electronic Arts, and Gene X. Now, here's the deal for earnings. I was concerned heading into earnings when these big tech names were trading near all-time highs. I said many times here on this channel, earnings are priced for perfection. There's really no upside left here in these mega cap names. Now, I think it's more balanced. Now I think bad numbers will be seen as bad, and good numbers will be seen as at least not bad, okay? I don't know how much upside you're going to have with good numbers, but I don't think you're going to see a lot of downside. What you were seeing with something like a Google, for that matter, Google had good numbers. They beat, it was a great report. What happened? The stock still fell 5% the next day because it was priced for perfection. And then you've seen a couple more days of selling in just your broader kind of big tech names. That repriced and reevaluated investors' expectations for earnings. So I think you're in a much better place now as far as what we're expecting. And I don't really think earnings now are going to be a huge catalyst for markets, and not a huge catalyst for Tesla. Now, of course, yes, it can be. If earnings come in really good or really bad, it will be. But assuming we just get mainly in line numbers, which seems most likely at this point, then I don't think earnings are really the huge deal at this point. Now, with that said, you do have more earnings throughout this week, like Meta, ARM, Qualcomm, Lam Research. Some of your AI names can be a little bit more important in my personal opinion. But we've already gotten quite a few kind of AI-related stocks that have already reported earnings, and they've been okay, so I'm not expecting any kind of big disasters there. And then you have Amazon, Apple, and Intel, Coinbase, DraftKings, Roku, Block, and others that report Thursday and after hours. But by then, it's all going to be focused on Jerome Powell on Wednesday. Again, as long as earnings do not come in really good or really bad, then you're probably not going to get much of a broader market reaction based on earnings at this point. Now let's talk about this win-win potential scenario we are in for Tesla, okay? And the simplest way to put it is coming down to Jerome Powell. If he does not signal a cut coming September, if he just stays neutral, data dependent, the same Powell that we have seen before, that's going to be bad for small caps and good for big tech. Now, Tesla is kind of being grouped into that big tech category. Some days it's being grouped into interest rate sensitive and small cap. As investors start to pay more focus to Tesla's energy business and Tesla's AI business, less of the focus will be on the interest rate sensitivity aspect of Tesla's business. So I believe either way it goes with Powell coming Wednesday, you're either going to see money go out of big tech into small caps, or you're going to see money go into big tech and out of small caps, right? Or vice versa. So, I mean, from that perspective, I think Tesla can benefit from both ways that the markets really want to trade around Powell. Especially, again, seeing this kind of rally on a technical basis, it does look like you are set up for higher levels. Now, I was calling out this 20-day moving average. We would likely test that this week around 242, 241 or so. That still looks likely. But I do think following today, and if the markets start to really get behind Tesla's AI and energy endeavors beyond just the auto business, this could set you up for a much, much larger rally. And, potentially heading into October 10th, I still think it's likely you could be in the 300s. That's what I said prior to the Robotaxi event being delayed, that you could head into that event around 300, maybe 320, and then make your way to all-time highs after the Robotaxi event. And if Piper Sandler's kind of, leaking a little bit of information here, which it does seem like they are possibly doing, that would mean some exponentially large returns. Now, Elon Musk also said something yesterday that did catch a lot of people's attention. Elon Musk says once Tesla's FSD is fully unsupervised, the stock will soar like how Nvidia did. And a lot of Wall Street does, obviously agree with this. And you're seeing kind of the voting taking place right now, right? As Tesla stock is going higher, there's more people gaining more confidence that Tesla will actually solve full self-driving. And this will be a huge contributor to Tesla's business. And let's just give a brief kind of rundown of where we're at. If the economy really is strong and we're heading into a soft landing, and the Fed's going to be cutting rates multiple times, and Tesla's profitability should improve even more from here, margins get better, as Adam Jonas said today, specifically around the EV credits. Tesla could be getting a lot more of those in the coming months, as you do see a lot of other auto companies really pulling back on EV investments. If you have all of these positive things going for us, potential breakthroughs in FSD coming, the Robotaxi event on October 10th, what's really the negative here in the short term for Tesla? What, the Fed waits until November to cut rates instead of September? That's possible. Markets are assigning a 100% chance of a September rate cut. So does that seem likely at this point? Probably not. Beyond political or election uncertainty, a potential correction around that time, what's there really to be bearish on right now for Tesla? It's hard to come to a bear thesis if the economy stays strong. I struggle with that. I try to see the bull and bear perspective with every single stock that I own, and right now the only thing I got with Tesla is if we go into a recession, that's going to suck. Tesla's not going to do well. But, from Wall Street's perspective, there's no recession coming anytime soon. Now, could we have recession fears by the end of this year? Of course. But over the next 1 to 3 months, are we going to see that? Probably not. So as long as nothing dramatically changes, then I think Tesla stock can do very well here over the next couple of months and likely make our way into the 300s, if not, again, new all-time highs by the end of this year. Now, just briefly, this article says Tesla's Q2 results are better than it seems. Here's why. They really go on to say that things were just better than feared, that Tesla's margins had been falling for 4 quarters in a row. They actually bottomed and seem like they're stabilizing. They say here, in Q2, what really disappointed investors was a sharp drop in profitability. Tesla's net income fell 42% year over year to $1.8 billion. On the bright side, gross margins dipped slightly to 18%, only 2 percentage points lower than Q2 2023. This was somewhat encouraging considering gross margins had been significantly below 18% for the previous 3 quarters. So margins actually, came in good. And I think that is one part of Tesla's earnings that Wall Street did not pay as much attention to. Now, as I have mentioned previously, what will likely help drive Tesla stock higher is this $23 billion that is currently sold short in Tesla stock right now. And if we take a look at just how much money short sellers lost today, they got absolutely destroyed. Okay, by 104. Short sellers lost about $1.3 billion today alone. If we do continue to go through a rally for Tesla, there's not too many days that these shorts are going to want to hold on to these losses, especially as Tesla went from 271 down, right, to 217 at one point. If you're going back up into the 230s, maybe the 240s, 250s here soon, is that a stock you really want to be short on? Probably not. And that can help to fuel a lot more upside for Tesla stock, in my personal opinion. So let me know what you think about this information down below in the comments section. Of course, earnings will be important. The Fed will be important, but really the cleanest cut way I see things for Tesla is it really doesn't matter too much. It really doesn't. I think Tesla is going to do its own thing. And Tesla can rally even if the markets do fall. And I want you guys to remember that today's a pretty good testament to that. Tesla really just outperformed everyone else. And I wouldn't be surprised if this continues for a period in time. Like the robotaxi network in and of itself, self-driving cars is such a big opportunity. You really can't put a cap on it. It's not like another business introducing a new product line or something. This is on preposterously massive scales, right? This is the biggest scale you can think of in terms of what a company can actually do. This is in terms of iPhones has a total addressable market that is equal to every single person in the whole world. That's essentially the iPhone market. This could be even bigger than that. So I would be a little bit careful being too negative here. If you did want to get some exposure to Tesla, maybe you're not as exposed as you would like, then I think now is still a great time to be able to get some exposure. And the 230s is better than the 240s or 250s, where I think we're probably going to be here in the not so distant future. So again, let me know what you think about this information down below in the comment section. Hit the like button and subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.